So they're putting $8 billion in to back this as the fuel of the future.
Well, Davidson, welcome to Going Public, mate. You are the CEO of United H2 Limited. What does UHL do, just to kick us off?
We are effectively a portfolio business. So we have 25 businesses, all in the space of hydrogen. What we're doing is we're an incubator and an accelerator and an investor. So we do all of that together and actually build these businesses from the ground up.
Your business sounds like it's at the forefront of the whole hydrogen revolution that we are heading into. So all these acquisitions, all this roll-up requires capital.
Our plan is to list the business in the next 6 months and to do that on the ASX.
I think that's a really important point you just made. Well, Davidson, welcome to Going Public, mate.
Thanks.
Thanks so much for coming in. Now, you are the CEO of United H2 Limited, or UHL. I love the fact you got H2 Limited in there, but I'm going to leave it to you to explain what H2 means. I know what it means, but because I love chemistry and physics. But what does United H2 Limited do, just to kick us off?
Yeah, so UHL, we are effectively a portfolio business. So we have 25 businesses, all in the space of hydrogen. So we go out and actually build these businesses from the ground up, right from the business plan. We go and hunt out scientists, technologists, and intellectual property, and then we'll go and build the business around the IP. And so we'll find always in that hydrogen space, we're trying to find something unique that we can patent, that we can then go and produce hydrogen or anything in that sort of hydrogen ecosystem. So we're actually building hydrogen in cars. We've got hydrogen production facilities. We've got an ammonia powered jet engine. So it's right across the spectrum that we're building these businesses.
So it's sort of like a bit of an aggregation, though. If correct me if I'm wrong, it's like you're Pac-Man. You're just going around and gobbling up as many of these things as you possibly can.
Yeah, but they're not established businesses. So what we're doing is we're an incubator and an accelerator and an investor. So we do all of that together. And so they're early stage businesses they'd be pre-revenue. So what we're doing is we're actually helping them on that business development side. We'll go out and help them sign a contract in the Middle East or over in Europe so that they can actually start bringing in those first revenues.
Right. So you obviously have had experience in this in the past. So if I was to go back and ask you about, 20 years ago, you're a relatively young man. I'm looking at you.
I'm 50.
Compared to me, I'm talking about relatively. 50 is your best years. I reckon anyway. You're in the prime of your life. Have you had experience in doing this sort of stuff before? In other words, what do you bring to UHL in this regard, given your model, your business model?
Yeah, I've had a long history of sort of building and aggregating businesses. So I originally did it back in a business called Nitro. We built up to about 500 staff, 9 offices around the world.
And what was Nitro?
So it was a digital business, but right across that sort of advertising spectrum, bit of technology as well. So, sort of really building digital businesses for clients. And we got to 500 staff. My job was to, fly over to London, buy the businesses, consolidate them together, fly into Dubai or Moscow and start them from scratch. So I'm used to, that startup mode of just building a business organically and then aggregating it together. We sold that to a business called Sapient, NASDAQ listed business. We did it for all scrip. So that was the key part of that transaction that we effectively merged into them.
So that model of aggregation requires capital, or at least it requires either cash capital or equity capital. So Nitro, with you and Nitro, you're going around the globe and making acquisitions and or investing in, I don't want to call them startups, so smaller businesses that need capital, they need guidance, they need access to infrastructure, etc. Where did you guys get your capital from to do these things? Were you subject to a whole lot of raisings? How did you go about the process of building the capital to reinvest?
Yeah, so originally in that business, it was founder-led, so he put in the original equity capital. But then as we grew, we got debt into that business. So it was all leveraged through debt facilities and then deferred payment structures with all of the companies that we ended up buying.
Yeah. When you say deferred payments, it's a bit like your vendor, the person you bought from, gets paid based on milestones.
Yeah.
So earnouts, what they call earnouts. So you might buy it. You might say, look, it's a $10 million business, or let's make it a bit more reasonable, $5 million business. We'll give you $2.5 million worth of stock today, or shares in our business, or cash. And we'll give you the other 2.5 subject to you reaching these milestones over a period of time. Is that
that's how it works?
That's the model.
Yep. And so if they hit those milestones, they effectively cash flow fund about 2/3 of the acquisition themselves, and we would fund the upfront component with the payout.
They're funding your acquisition. Correct. Effectively. Yeah. And what's interesting about that is that you're sort of, on one hand, you've got them still invested in the business, so it's in their interest to make sure that they get this $5 million valuation, because if they don't get the $2.5 million on the example I gave. Is that because you find, if at that stage of investing in a business which may not be having, maybe not be making a profit, but importantly might be making a loss, is the thesis behind that is that if you pay them everything today, even if you don't pay them 5, you pay them 4, they walk away and you lose all the IP and you lose the drivers?
Correct, yeah, and they have relationships that you want to maintain. You want to transition over a 3-year window. But most importantly, if you give someone $10, $15 million, they lose their drive and motivation.
Because they made it.
It's right. They start, Googling mega yachts. They start looking at how to spend that $15 million. So the deferred payment structure keeps them focused on that revenue target, and they know that every dollar that they make in profit, they're getting a multiple of that. So, their motivation is really accelerated in those later years. So we would try and keep it for 3-4 years that you would have the earnout structure.
And in that process, two things strike me. The first thing is working out the period of time over which you as the purchaser, your company, Nitro in that example, as the purchaser or the acquirer, and them as the vendor or the business that you're targeting. Two things strike me. The first thing is the period of time over which you decide to build this earnout into 1 year, 2 years, 3 years, 5 years. But probably before that, it's the valuation. And it's not only the valuation of their business, the enterprise value of their business, which is difficult to do because they are in the growth stage, or a lot of them even before that, they're in the early stage, very early stages. And then the valuation of your business, of Nitro, because if you're going to give them stock in particular, part stock, part cash, or all stock, whatever the case may be, they're going to be comfortable with the valuation you give yourself. Can you take me through how that process, it works differently every time, I know, but just sort of what are the general tenets of building that process up? Like let's say I got a business and I'm looking at selling into Nitro, and you want to put, I think it's worth 10 million. You think it's worth 5 million, but you're going to give me your shares, $5 million worth of shares in your company. What do you say to me?
Yeah, so it's all, we lock in that early, the first tranche is all based on 5 or 6 times the profit that they're doing today,
right?
Divided by the number of years. So 25% of that they'll get up front. If they really believe in their forecast and, their ability to drive that revenue up, then they get it at the back end. They're getting 5 or 6 times the profit that they generate in year 2, 3, and 4. And so that was what we would do. You would say, okay, well, great. If you've got a really aggressive forecast, it's an earnout, so you've got to deliver against that. We would value them on what they delivered the last 12 months, and they get that valuation. And that was the key, that you would lock them in. We would actually get a lot of synergies out of buying these businesses, so revenue synergies and cost synergies. So for us, a 5 times multiple was small because we're doubling the profit by bringing it on board to us. So you're actually only paying 2.5 times their actual profit. And so anything they deliver is incremental to us. So it was really the revenue synergies that we were able to get by moving them onto our contracts were a lot more lucrative.
Yeah, because the synergies you're talking about are things like CFOs and accounting departments and, I don't know, collection departments if you're collecting money, design departments if you're designing stuff. I mean, you can build people's capacity in your current business to take over some of the capacity of their business. In other words, maybe reduce some costs or help them not have to take on new costs in the future. Yeah. What happens if they're not profitable though? Let's say it's a gun business. They're growing so fast, but they're losing money. What did you do in those cases?
We wouldn't buy those.
So that was part of your mandate?
Yeah, we would only buy profitable growth businesses and in segments that we wanted to grow into. So as digital was really expanding, sort of getting big clients as a result of bringing those on that we could then take right across the spectrum of our other services. So we were dealing with all global clients, Mars, Kraft, Volvo, etc.
Customers, so to speak.
As customers, yeah. So those we would buy a business that had Coca-Cola as its customer doing one little service. We'd bring it into the fold and we would offer 5 other services back to the
leverage it.
Yep. So that's the revenue synergies.
So that makes sense. So I think what's important there is, if you're doing this, if you're going down this process, you have to have a model that you operate on, a financial model. It's a business model, but it's also a financial model that works. What did you learn from all that you've taken into UHL, or United H2 Limited? So what have you taken into that in terms of that modelling?
Yeah, scale. So that everything is about sort of getting scale into these businesses. So that's why we're effectively providing centralized services to 25 startups.
So at UHL, you have 25 startups.
Yeah, so 25 portfolio businesses sitting underneath that we're building or helping them grow. And so they can't afford a CFO, a business development head, all of those bits because they're a team of scientists. So we're centralising all of those services and providing all of those facilities into these growth businesses. So that's what I mean by we can cross-collaborate across that whole ecosystem. So if we're doing a deal with someone in the Middle East we have injectors that go into trucks to reduce their fuel consumption and also reduce their carbon emissions. We can be in there selling to that company for trucks, but we can also be selling another company does it for generators, and we actually make hydrogen trucks. So there's a lot of cross-selling that we can do by having one central team doing the business development and also handling a lot of the corporate side. So we do all the capital raising for these businesses. They don't have to have their executive team out running around doing all of the capital raising. So that's the main thing, is centralisation of services so that they can get to scale.
So we're unpacking this, and it's very interesting to me. So I guess I want to get to the actual thesis of UHL. So UHL has 25 individual businesses that it has aggregated under UHL, and they're all at different stages, I guess, and they're all in different parts of the industry that all relate, though, but they're all related to hydrogen energy.
Correct.
Is that be right?
Yep.
But they're not actually all scientists who are sitting there trying to work out how do I create hydrogen energy at the most efficient price. So they're doing different aspects. So you've sounds like you must then have mapped out how hydrogen will be delivered, how hydrogen will be produced, when it is used, when it is most efficient. You've mapped out all these 25 industries, 25 business inputs, all the inputs these 25 businesses are providing to the hydrogen industry. Would that be right?
That's spot on. Yeah. And so we want to be a portfolio play right across the industry so that investors can come in and they're hedging their bets into an industry and a segment that they don't know that much about. But we're going right across the industry. So we actually have a refueling business. We have a couple of hydrogen production businesses. We have, in mobility, we have heavy industry, those kind of businesses right across the system or the ecosystem, and even right into exploration. So we have businesses that can look for gold hydrogen, they call it, in the ground. So exploration. So we have very unique technology that is 100 ground sensors that measure how much hydrogen is seeping up through the ground, connected to satellite imagery. So it's a very diverse portfolio, but at the moment, they can all cross-collaborate. So if we have a client in trucking, we have someone that can build a refueling station for them. We have hydrogen production where we can actually produce hydrogen and sell it too.
Help me out here, because it's not an area I'm that familiar with, hydrogen as a fuel. And you mentioned you have ways that you can map out potential hydrogen exploration areas or production areas through satellites. But I can understand coal because I can see coal and it comes out of the ground, and all the other. And I sort of got a bit of a sense of gas too, and oil. I can sort of vision it. Hydrogen, I sort of not that familiar with. So, yeah, where the hell's it come from?
It's very simple. So, if you think about water, H2O,
Yep.
all what they're doing in a hydrogen production plant is they're separating the H2 from the O, and you do that through a membrane. But effectively, all you need is renewable electricity to pass through that, and it splits the H2 from the O. So there's no emissions. There's only oxygen, and then the H2 gets separated and becomes the fuel, and we store that. So it's a very simple process. What's difficult is securing and getting access to cost-effective renewable energy. So a big electrolyser needs to be placed next door to a wind farm or a solar farm or a hydro farm. That's that's green hydrogen. We have other ways of producing it, right down to we have a what's called a waste to hydrogen solution. So the non-recyclable parts of plastic bottles we can actually use as a feedstock into a pyrolysis process. So heating up the plastic bottles, and we can extract hydrogen from that system. So it can even have another way of producing hydrogen, but the most common will be green hydrogen from renewable electricity.
Right. So let me just dig down on that a little bit because so I can understand it. So I get the H2O, and you strip the two hydrogen atoms off the oxygen atom, and you got hydrogen, you got oxygen, so there's no waste, which is good. You got oxygen, which obviously goes back up in the atmosphere, or gas. I don't know where it ends up, but maybe put that in bottles too, because we do need oxygen as well. But to do that, you need a process of probably sounds like you need alternative energy power to do that. It'd be silly if you just plugged it into the wall and you got your electricity out of the wherever it comes from at the moment. So that's why you said you like to locate these plants near an alternative source of energy straight up. So that, you put it next to, I don't know, wind farm or solar energy farm or something along those lines. That makes sense to me. But you need the water. Where's the water coming from?
So distilled water source. So
where's that come from though?
So we will actually, part of that production facility, when you do it, you will actually get a water purification system as part of it. So very similar to like a desalination plant. But here, if you take the base water, you're just distilling the water as part of the process.
Because you get all the crap out, because you don't want a whole lot of lead or something, or some other chemicals.
Otherwise, so when it goes through that membrane, otherwise it effectively clogs the membrane that you're using.
Yeah, so you got distilled water, or have a process of distilling water, but you're saying that you do it on the coast next to somewhere on the west coast of Australia, when you're sucking the water out of the ocean and turning that into distilled water, or you're getting water out of a lake, or are you harvesting it from the rain? Where does the water come from?
The water is, you're using the normal source water. You're just distilling,
like tap water.
The tap water,
but
yeah.
you pay for the tap water,
Correct,
obviously, yeah. So it's tap water that comes out of, say, Warragamba Dam, for argument's sake,
yes,
or any other source. Because if you're in Dubai, it's probably desalinated water. And then you've got this process that one of the businesses you've invested in, I guess, has a process of separating or clearing the water out to make sure it's distilled, and then you've got some process. Then there's another process where perhaps you've invested in one of these companies that remove the atoms from each other. So you've got hydrogen and oxygen. Is that correct?
Yep. So it's called a PEM. It goes through the membrane.
Yep.
As it passes through that membrane, that's where it's split.
And then the hydrogen comes out as a gas, I presume.
Yes.
And you've got something there that stores all the gas.
Yeah.
Right. And then the gas is the new source of fuel.
Correct. Yeah.
So the gas then can be put in a truck tank or a car, I presume.
Correct.
Or
so we have a business called H2X where we build like a Ford Ranger pickup truck.
Yeah.
And in the back we have hydrogen tanks. Those tanks are made effectively twice as thick as a bulletproof car.
Wow.
It was even the tanks that we've used have gone through testing where they've actually fired a rocket launcher at those tanks and it didn't pierce. So,
wow.
They're real industrial strength tanks. They only hold, so for example, they would only hold 6 kilograms of hydrogen in those tanks. But for example, a Toyota Mirror, which is like a the small hydrogen car that Toyota has produced, that can run for 600 kilometres on those
one
6 kilograms of tanks.
And it is, I mean, this is a little bit outside of the territory because I don't know, it's new industry, new science, new tech. Is it competitive? So that Toyota car that you just mentioned, and the hydrogen and the tank, etc. you mentioned, the cost of producing the car, is it? Are we at a stage yet that it's competitive with, say, I don't know, a petrol version of that same car?
The fuel we'll get down to. So the vehicles are all made for heavy industry, So at the moment, the vehicles are all trucks, mining equipment. That stuff is more expensive. And the reason that the federal government just did the announcement,
because that's what I'm getting to.
Yeah. So they're putting $8 billion into back this as the fuel of the future. And what they're doing is getting the economy of the fuel down to be on par with diesel is the strategy. So they're putting $2 per kilogram to reduce that price down. America's done the same. They've $3 US per kilogram, and Europe they do 4 euros per kilogram. So everyone's trying to get hydrogen pricing down on par. But obviously, what happens is, with those subsidies, you can get the price of hydrogen down to $8, for example, per kilogram. And so that car that we're talking about that can run for 600 kilometres, that is more price effective than running it on diesel, for example. So once we get to that point, once that's 2027, that government incentive kicks in, hydrogen will be as cost effective.
Right. So by virtue of the subsidy.
Yeah.
And I guess the thesis behind that is, though, that over time the production costs will get lower. They won't. Businesses like yours and or whoever the users of these trucks and tractors and whatever it is that are being used, heavy machinery, who uses hydrogen, over time they'll become much more efficient. And many more of them, so production costs should drop,
yep.
And then the government won't need to make the subsidy over time. Is that the idea of it?
And it's purely just solar and wind. So solar and wind at the moment is expensive to produce. It's effectively the only input of substance that's going into creating hydrogen is the renewable electricity that's expensive. So that's the main input cost, and that's going to take time to come down. It's purely because of the level of demand from every business wanting to buy green electricity.
Yeah, and I guess they also want to they just got to build economies of scale.
Yeah.
They just got to get enough of these alternative sources of power, electricity, to go through the process of electrolysis, whatever I think it's electrolysis, whatever the process is called, to turn your H2O into hydrogen and oxygen. That's the idea of it. Is it heavy on power? I mean, do you require a lot of power to get this process done?
Yeah, so it loses. So it's only 75% of the electricity source results in converting through. So you're losing 25% in that process. Heavy use of electricity.
And what do you do with the oxygen, by the way?
So it does just emits into the
just goes in the atmosphere. Yeah. Well, that's probably a good thing. I mean, we need oxygen.
Could bottle it for you and sell some.
No, I was just thinking about hospitals or something. I thought maybe perhaps a hospital. It was getting bottled, and you were selling it off to hospitals. So you've now, and if I could just go back to UHL's model. So could you just share with me some of the examples of some of the technologies or services that you have aggregated under UHL so far of the 25? So there'll be some tech, there'll be some services, I guess, some service industries to that tech. What are we talking about here in terms of hydrogen?
Yeah, so the unique ones that are available today are hydrogen injection systems that can go into a diesel engine tomorrow. So if you've got a big trucking company and you've got thousands of trucks on the road, we've got a hydrogen injector that can go on board, only costs $6,000.
So you put it on the back of the truck somewhere?
Yep, it just carries water. It doesn't carry any hydrogen. It creates the hydrogen as you're driving and injects it into the air inflow, and it reduces your fuel costs by 15% straight away. It reduces your CO2 emissions by 20%. So a trucking company can save per truck, they spend $6,500, they save $40,000 on fuel straight away per year. and then they're reducing their CO2 footprint instantly. So, if you multiply that by a trucking company with thousands of trucks, it's a huge petrol reduction and a massive CO2 reduction as well. So we've got solutions that we can put in today so we can get people starting into the hydrogen ecosystem.
Without a full conversion.
Without a full conversion. $6,500 with half a day installation by a mechanic.
So just take me through then the entity that you guys acquired. So just that process. So it doesn't matter what the name of the entity is, but how did you find this entity? Is this a scientist or an engineer has worked this stuff out and they're sort of labouring at some university in the Department of Engineering? And how do you find these people?
Most of our businesses are, scientists or engineers out of university. This one was an IP that we've grabbed out of Asia, and we've managed to grab it by territory. So we sell that, and we'll sell that into Latin America. We'll sell that in Australia, and we'll even sell that in through Europe. So
you bought the license.
Yeah, we'll grab and we'll get the exclusive territory for that particular IP.
And how do you? I mean, I don't know whether it's you or somebody else, but how do these things get pitched to you, or do you go out hunting for them?
A bit of both. So some people bring. We got one yesterday where we had a gold hydrogen exploration team.
What the hell's gold hydrogen?
Gold is in the ground. So they have gold and white hydrogen is in the ground when it's stores, and they're trying to explore and look for it. So there's an ASX listed company called GHY. And that's a good example of one tenement they have in South Australia that they're drilling to find gold hydrogen in the ground.
But gold hydrogen. What is gold hydrogen?
So it's the term that they use, either white or gold, when it's not manufactured. Green is when it's manufactured with renewable.
Right.
White and gold is when it's found
like naturally existing hydrogen.
Correct.
On its own.
It's a store in the ground.
The ground. So there might be a big cavern or something like that.
Yep.
Of somewhere in the ground with H2 or hydrogen sitting in there, just pure hydrogen.
Correct.
Yeah, so it's not gold.
Locked in under, it's just the name they call it is gold.
Yeah.
It gets locked in under the salt crusts or in particular. So there's large stores in Poland, large stores in Australia, and large stores in sort of mid America. They can sense where those are, and they have to use sensors to try and find where's the best place to get a tenement to try and do it. So three big companies in the US are doing this, one in Australia. So, it's a emerging area is hydrogen exploration.
And which is not dissimilar to how we used to explore for iron ore and everything else. I mean, and or just natural gas for that matter. So you guys have invested, UHL's invested in an entity that actually has technology around, or sensor technology that does this.
Yeah, Polish scientists created this unique sensor technology. So because the gas is actually seeping up through the ground, they can detect it on satellites. And the 100 sensors that we put on the ground is a micro measuring it across the whole tenement about where that store is, and looks at the feasibility of where should you drill to start looking for that. Because it costs $1 million to drill a hole. It's an expensive hole, but it's a kilometre down, obviously, to do the testing for hydrogen. It takes months for them to do that testing.
So, and again, did these people pitch to you, or did you guys read a science magazine or an article written somewhere in some science magazine that how do you find these people? It's crazy.
Yeah, so those are that's what UHL does. We have a business development team and a team that is hunting down new technology, and we approach them and say, okay, great, you've got the technology, we'll build a business around you, but let's have 50% equity each. So we have 50% equity in that business. And then on top of that, we'll go and hunt down the mining tenements as well, using the tech, and we'll take a split of the future hydrogen that comes out of the ground, which is very lucrative, obviously.
That's pretty cool. So, so your approach to these organisations is, look, you guys are scientists, you got a pretty good tech. Subject to us testing the tech and our guys having a look at it. We will fund you. You put the tech in, we'll put the dollars in.
Yeah,
or you might be a split of dollars and or equity in your business, and we'll take this to market, so to speak. And in your case, in the example you just gave, well, actually in Australia we'll find you the tenements, so we'll take your tech but because you can't just go and put your tech over a sensor just over someone's farm, for example. You got to go and get
exploration
licenses, just like you have to do for coal and gold or anything other thing.
And only in South Australia at the moment, so there's no framework outside of South Australia for when you get to the next stage to develop hydrogen. But South Australia's
only
the
South
first
Australia
one to kick it off. Yeah,
really. That's mad.
Yeah. So that's why we focus Poland, America, South Australia.
So and Poland does have these gas pockets, or whatever you want to call them, hydrogen gas pockets in existence.
Yeah, theirs are about 5 times larger than Australia's. So it's huge, huge underneath Europe.
And has this been commercialised anywhere yet in the world, these gas pockets, so to speak?
No, still to be tested. So it's mixed with helium under there. So they're looking at how do they split the hydrogen and the helium when they do pull it out of the ground like that. But Bill Gates's business, Breakthrough Energy Ventures, has invested quite heavily into one business over in the US that just does this. And that's, again, because they believe this could be a massive solution to, the clean energy future is to find it, produce it cheaply out of the ground.
Well, what's interesting about that, when the hydrogen and the helium are mixed together, is that I don't want to be boring, but on the elementary table, hydrogen and helium are only one place apart. And, one theory is that helium came from hydrogen being one of the very first elements, elements ever. And because everything just sort of, and what we're talking about is adding electrons and protons and neutrons, and some being stable, some being unstable. But it's very interesting that, as you said then, because, as I don't want to get too much into the weeds, but helium is quite a stable element. It's quite a stable atom. But it doesn't surprise me when you said that helium and hydrogen are in those, let's call them caverns or pits, and that somehow you have to try and split these two off as well. So, this is, your business sounds like it's at the forefront of the whole hydrogen revolution that we are heading into. That's what it seems like to me. But you're hitting on every element of it. So you're hitting on all the services. So I would say I don't know the name of the business, but the one which has the sensors from Poland and
Alpha.
Yep. I would say that's more a service industry, and that is servicing the tenements or exploration licenses, in this case in Poland or in South Australia, servicing them by providing sensors. Whereas, do you own another business, for example, that actually is working out how to split the helium and the hydrogen?
No, not at this stage. So,
but if you had
we'll
one,
search for that next,
that's your proper tech business, proper science tech
service
business
provider into the industry.
Yeah, correct. And so your portfolio, because you effectively, what UHL is, it's a portfolio business. It's a business that owns a portfolio of businesses.
Yeah,
that are in a rising tide, that being, and pardon the pun, but rising tide being a rising tide of new energy.
Yes.
Being hydrogen, which then sort of, and I never knew a lot of this stuff before, but now I'm so glad I met you, because you're making clear in my mind what this whole momentum is around hydrogen, which then clicks into alternative sources of energy in order to make this happen. You need other sources of energy to make this happen. Can I ask you this? Is the reason you need, say, wind power or solar power, etc., is that because of the is that driven by the 2030 and the 2050 promises, or is that driven by cost? So is it more and or efficiency? So what's driving that process of using so-called green power to power your process to get hydrogen out of water? Is that because, is it remoteness? Is it access? Or is it pricing, costing? Or is it targets?
Yeah, so it's definitely targets. So the 2050 or the 2030 and the 2050 targets are driving it. It is a lot easier so that you can make it out of coal. You can make any electricity source can be used.
Yep.
And obviously that is the cheapest, fastest way that you could produce. They call it either black or brown hydrogen. You could produce that tomorrow very, very cheaply.
Oh, really?
Absolutely. Yeah.
Okay.
So that is, it's just the cost of the electricity. Obviously, if you sat it and you were using coal-fired power stations to provide that electricity, that's cheap. Obviously, the any of those incentives, any of the market, any of the end customers don't want that product. They want green hydrogen. So it's being driven definitely by the global targets to reduce emissions. And, that's the whole purpose of having green hydrogen as the solution, is it needs to be regulated to ensure that was produced in a green hydrogen environment. And that's definitely one of the hard things, is looking at certification.
And I guess subsidies drive it a little bit too. I mean, is this the first time, the last budget we just had, last federal budget we had in May, is that the first time we've seen subsidies allocated by the government in a meaningful way?
Definitely. So particularly Australia, but Australia's the last to come on board because, we've traditionally been a critical minerals supplier, and they're looking to make sure that we stay to be effectively a renewable energy superpower. But this is the only way to get that renewable energy and export it. We can export those critical minerals for batteries, but we can store and actually have hydrogen in tanks that we can ship over to others. So they're looking for us to become a hydrogen superpower. All of those governments providing those subsidies is really just a validation to say right across all three, America, all of Europe and Australia are now providing those subsidies, but it's a validation that they're saying hydrogen is that fuel of the future. They've all done the research, they've made the choice, they know that it will come in, and that's why they're subsidising it.
So does the subsidy, sorry, one more question on the detail, but does the subsidy go to the hydrogen producer?
Yes.
Or does it go to the renewable energy company that produces the energy and that allows you to produce the hydrogen?
To the hydrogen producer. So we have to pay the renewable energy for the cost of the input. So it's just one of our costs of input.
So, but it comes off your actual cost. So if you're paying them $1,000 or something, you're going to get a subsidy against what you just paid.
Yeah, so once we produce,
the government reduces your cost.
We have to produce a kilogram of hydrogen.
Oh, right.
Let's say it costs us $10, and then we get $2 back.
Right, that makes sense. Yeah. So all these acquisitions, all this roll up that you've been doing requires capital. You guys have been, you obviously been raising capital. Have you any thoughts about it going public?
Yeah, definitely. So we've got a really active investor base. So we actually have about 110 sophisticated investors already on our register.
So you're a public company at this stage?
Yes. Yeah, we're public unlisted. So they have come to us. They've hunted us down. So they're all passionate hydrogen supporters, but they've got in at a very early stage. And obviously, we continue to keep raising as our business keeps growing. But they've got on board early. So as part of our process, we're starting to look for bigger pools of capital. And so obviously our plan is to list the business. We're planning to do that in the next 6 months and to do that on the ASX.
So you're looking at the ASX. Would you consider NYSE or NASDAQ, etc.?
Yeah, we've looked at them all. Obviously, sort of different listing rules around size and scale. We just think, one, the Australian market is good. They're used to having energy companies on there and supporting energy companies. So, we see that, a lot of that sort of mining money moving away from mining, looking for a new home in clean energy. And so that's why we're looking at the Australian Stock Exchange at the moment. And then there are others in Canada again, but they have much smaller size and scale. NASDAQ obviously would be the end game eventually. It's about 7 times bigger than the ASX, and it has the depth and liquidity, but you need to be, sort of double the size that we are now. So it's as
a requirement. Yeah, because
to make it worthwhile, to make it
worthwhile, right?
Worth the time and effort of being listed over there. You need to have obviously, a base out of there, but it's the size you want to be larger to get the time and attention of investors.
And what stage are you at right now? So, that requires a number of people to be co-opted into your environment. You need investment bankers, you need stock market people to support you, you need lawyers. Unfortunately, you need lawyers because they have to do everything right. You need probably big accounting firm or an accounting firm at least to run all your financials, make sure all your modeling's right. You need due diligence rooms, et cetera, et cetera. What stage are you guys at now? Yeah,
so we're 6 months away. So we've got all of the audited accounts. We've got all of the due diligence rooms. The bit we're at the moment is appointing the bankers. So we've got we're actually doing it a little differently. We've got one in America, one in the UK, and we will appoint one in Australia.
To address markets over there.
Correct,
to
yeah. So
investors
we want to be able to get US or North American investors engaged. There's a lot of support from the UK. So we've appointed a firm in the US, another one shortly in the UK. And in Australia, we're just going through that stage of the 4 or 5 that we're sort of shortlisting and going through. But ultimately, we're looking for a broker and a banker that fits into that right segment. So there's no point us going and appointing a bulge bracket large who only deals with ASX 200. We're dealing ones that really specialise in the small cap space.
Yeah, so the process requires, there are certain things you just got to do. I mean, there's no choice about it. And really it is about pointing external people to run those parts of your process to get listed or to get accepted by the ASX to list. Mm-hmm. You've got to have people who are experienced at delivering outcomes, but equally, and I think what's a really important point you just made, in terms of who you appoint, you've got to have people who talk to your market of investors, people who are keen on, let's call it green energy for argument's sake, or green hydrogen, probably even more importantly, even probably closer. So how would you best describe the person who potentially would be your investor? Are they mum and dads, or are they family offices, or are they instos? What are we looking at here?
Yeah, mum and dads and family offices is because we're a portfolio play into those, where people who believe in that sort of green energy transition occurring. So it's people with an SMSF, it's the family office that's looking at getting in and wanting a portfolio bet right across that ecosystem. So that's our perfect customer. Once you go up to the insto, they pretty much want to focus down into the individual companies that we have. So they would want to invest in the hydrogen production plant business that we have. They would want to invest in, sort of the aviation business that we have, to focus on one team and one business.
And they're probably a little bit more interested in dividends too at the insto level, a little bit more interested in that. Whereas the other investors you mentioned are probably more prepared to go on the ride, because they have a view. I'm going to get in early. Yeah. This thing that's a rising tide, I'm prepared just to sit back for a little while and let it develop, and let Will build all these businesses up with his team, and then. But is the story? Listen, in 5 years' time, all these businesses will be killing it. We should be making a lot of money, and then we'll pay some dividends. And is that sort of a story?
No, so I mean, our track record really stands at the moment. So we've already built 4 businesses and sold them, and we've already delivered a 12 times return to our investors
on the sale price. Yeah, on
the businesses as they were in this early stage, we've sold our stake as they get to earning revenue, and so we've delivered $24 million of dividends back 12 times, and so that's the track record, and that's why we believe in this model that we have. So similarly, even after we list those 25 businesses, we won't hold them for 8 years like a traditional funds management business they call closed-end funds management. They will hold all of those private equity style assets for 8 years, and then they'll give the cash back to investors. As we sell the stakes, we dividend them back to investors straight away. So we will be making those profits. So we want to keep making those profits out of selling the equity stakes and then dividending them back to investors.
So in other words, you're relying on your track record to say, listen, we can find the business, we can identify the entity, the business, wherever it is in the world. We can then help commercialize it, and then we can sell it down the track.
Yeah.
Because that's our track record.
Or parts thereof.
You might sell a percentage of it to somebody else, which means just sort of effectively joint venturing some other organisation for that entity's or that business's future. But the cash that you get, could be shares too, but the cash you get, you then will either look at distributing that or redeploying that into buying something else. It's a great model.
And even some of those businesses, we will IPO them standalone. Yeah. So we're working on some of those, even though they're early stage now. The exploration businesses, can IPO at quite early stages in Canada, for example. And so we start working on that now, even when it's pre-revenue, because once they find hydrogen in the ground, you're talking billions of dollars of revenues coming through if they find.
Wow, that's cool. Well, I'm look forward to Will seeing you H2 Limited, or UHL, listed on the ASX Stock Exchange, and I'm not only going to follow it, I'm going to actually follow it more closely than that because I'd like to be one of your early investors. So good luck. We're talking 6 months away, so we're probably talking towards the end of this year or early next year.
No, towards the end of this year.
Towards this year, yeah, okay. Great stuff. Will Davidson, thanks very much, CEO
Thanks, Mark.
of UHL.
Nice to meet you. Thanks, Mark.
Same.